In the third and final segment, we will focus on Silvercorp's plan for their large cash position, which equates to roughly a third of their $640 million market cap. Silvercorp has been hunting for advanced stage projects for many years now, and this year is shaping up to be the one where a transaction is finalized. With Silvercorp's track record of consistent cash flow generation and prudent capital allocation in mind, I believe that the upcoming acquisition will be both substantial and accretive to shareholder value. You're looking for a producing or advanced stage development asset, but what kind of, initial capital costs plus acquisition costs are you looking for? What's the size range, that you have set up for yourselves?
Yeah, well, I wouldn't say there's necessarily hard and fast rules. Obviously, something that's too small doesn't move the needle, is a detraction from management time and attention, doesn't interest us. An acquisition in the 100 to $300 million range, I think is well within our grasp, and then a capital cost beyond that. I think the main element here is that if it's a larger deal from an acquisition cost standpoint, how do we fund that? Do we fund that through equity? If it's a big acquisition cost, is it an acquisition or does it become a merger of equals? If after the fact, then there's a large, capital outlay, do we do that on our own, or raising the funding through a variety of means, or do we find a way to partner with a group after the fact? I think we've got a pretty open runway here to look at a broad range of things. I'd say there's lots of things that have been presented, which we're looking at, a large initial cash outlay, maybe for even a producing asset, but which was troubled and required a lot of further capital to turn around, and we didn't see value in those opportunities, but others did. So so we weren't active, or we didn't progress beyond the first stage. But I think there's a pretty broad horizon there, and again, we haven't raised any capital, debt or equity, in a long time, and so for the right deal, I think there's capacity there, and I also think through some of the relationships that we have, which are, I'm not going to say, entirely unique, but maybe sort of where we have better access to some of these groups, we might be able to put together an interesting financing package for what would be a large bill.
Going back to the potential moving forward, I'm being pressing here, I know, but going back to the potential moving forward with Silver Sands, hypothetically, you don't necessarily want to maybe spend all of this cash, so it would be preferable to use some debt and some equity. Am I understanding it correctly?
No, I wouldn't. I'm not too worried about that, because I think, again, it comes back to, if the economics of the opportunity look positive, us in our current form or us in a expanded base will be in a better position to access that kind of funding.
And when it comes to equity, I assume you don't want that would kind of be not the first option, of course, because you are trading to a discount to net asset value.
Agreed, at current prices. But if we've demonstrated to the market that we've done good deals and have added good operations to the portfolio, and we get a better valuation assessment by the market, then, like I said, open-minded to a range of financing opportunities to fund that or further growth initiatives.
So getting a sense of the project, you seem very open-minded in terms of financing. The size needs to be significant, but when it comes to the metals, of course, you're Silvercorp, you're a silver mining company. Are you open-minded to kind of hard pivoting towards a more gold focused? Obviously you are, since you bid for Guyana goldfields. But can you explain the metals, the geology, some of the parameters that you guys are, kind of looking at?
I'd say it's open-minded. You've obviously identified that gold is on the hit list for types of projects. I'd say it's looking at silver or gold with the potential for some byproduct contributions, kind of like what we have currently. And I think it really comes back to the specific nature of the project. So we're doing well with what are arguably difficult assets right now, but we're doing that in a particular environment where it's possible to do what we're doing. Looking around the world, if we saw an opportunity to build what looks like an economic, quick payback open pit mine in a jurisdiction where you can get a license to operate and get that mine built on a reasonable time frame and generating cash flow, we'll look at that. If we see underground opportunities, I think we're very good in terms of a group to assess that and to deploy the right resources to develop that opportunity. And again, you touched on Guyana. That was looking at something that was open pit transitioning to underground, and we took a long look and saw value in the underground opportunity there. So again, I think it's open-minded, but it's going to have to be the thing that we can acquire and turn around, turn to our shareholders and say, we've bought this, and we've got a clear timeline and a highly confident timeline in front of us, that we can say this project can be further advanced, financed, built, and brought into production on a reasonable time frame.
So, as we stand currently, are you guys seeing a lot of opportunity out there in the markets, or what's the status like?
I'd say it comes and goes. It's there's a range of opportunities that we see. So some of the opportunities come through specific processes that are run by a party, determines non-core assets, or they have a funding requirement, and they look at their portfolio and decide, okay, this is either non-core or is a potential source of funding. A process might be run on that. So we've seen those kinds of opportunities, and obviously we haven't moved ahead. We haven't been the announced winning bidder on any of those recently, but those continue to be run. We come across our own opportunities just by doing our screening of projects and companies around the world to find these. Some of the things that we had seen in particular towards the end of last year were companies that I would say that were struggling, and we're more looking to our cash balance and hoping that we could be the white knights rescuing by becoming a big shareholder, because the rest of the equity markets weren't there to provide them funding. We've done that in the past, but we're not really that excited and not really interested in doing that right now, because from a strategic standpoint, it doesn't necessarily bring us the ability to move ahead and to build that cash flowing asset. So we've probably pulled back from that and really focusing more on outright acquisitions.
Yeah. So in terms of jurisdictions, is it where is it focused currently? Your more more successful due diligence efforts. Where are you kind of visiting, or?
Well, I'd say it's a healthy mix of Latin America, Africa, and what I'll call sort of broader Australasia.
Okay. All right. And I mean that means that you're completely open-minded in terms of jurisdiction as well. I assume you would not make a large investment in China now. You want to kind of diversify with this next acquisition, I assume.
Yeah, that's the objective. Again, though, from a company management standpoint, if you were presented with just what was a phenomenal economic opportunity, and you turned around and said, "Well, what do we do? Say no to this thing that's going to, provide excess returns." And to be honest, I've had meetings with institutional shareholders that tell us that we shouldn't look outside of China because that's our strength, and we should stick to our knitting, and just use that to grow the biggest, best China precious metals company that we can. But that's obviously not our strategy. We're looking more broadly. We won't exclude China, but it's certainly not the majority of our efforts at any point, and recently as well.
You're seeing decent amount of good opportunities in the markets currently. Do you have a sense? I mean, obviously you can't say exactly when, but do you think it's likely that something will go through this year?
Yeah, I'm optimistic based on some of the companies and projects that we're currently reviewing, that we'll be able to get something tied up and announced here. I've had those feelings before, though, and felt optimistic and positive, and then something happens at the last minute, or just for whatever reason the deal doesn't happen, and so it's important to be cautious and not set too high of expectations. But I would say we've identified a few different opportunities here that we're looking at that look like they meet the technical evaluation threshold, and also where we feel that there's room on the other side and a willingness to transact.
Can you just shed some more light on exactly how how your due diligence process looks like? What are these steps that you go through?
Well, for a given target, we have to, at the very outset, think about, well, is this potentially a buildable project? And so, you were talking about open-mindedness in terms of jurisdiction. If you take Africa as a broad example, we could be presented with a project in a country in Africa and sort of rate that and sort of say, okay, no, this country is just not a place where we want to be operating. So even if the geology was fantastic, we wouldn't want to be there. At the other extreme, there's countries where we say, wow, if we found a great project geologically and a willing seller, this would be a great country to be in. And then there's somewhere in the middle where you might say, well, not the best of country, but others have been able to make it work. It's based on the locality. So let's decide whether we're going to evaluate it. Then what we typically do is sign a CA and really start from sort of the grassroots principles, bottoms up, looking at the geology. Let's look at the drill hole database. Does this have the kind of data that supports the resource that the project owner says they have? Or in fact, could it be better if it was looked at a different way? I'd say that's the key element. It all comes down to the quality of the resource. And from then on, obviously, you move through the other aspects of the project, metallurgy, environmental considerations, infrastructure, community, evaluating all of those to see, again, are you identifying fatal flaws that are going to turn your time horizon into 2 times what you thought, or indefinite, in which case everything that you've spent to acquire the project is sunk and lost money, and we want to avoid that at all costs.
What do you think that Silvercorp will look like in 5 years from now, in terms of size, market cap, production, cash flows? Go whichever direction you would like, but.
Yeah, well, I think they're all tied together. I think we will be a multi-mine, multi-jurisdictional company. We might not be called Silvercorp at that point in time, based on what the asset mix is. I think if we've been successful we will have taken our roughly, 50 million of free cash flow and multiplied that by 4 to 5 times, with, maybe 3 to 4 producing assets, maybe more if we're particularly lucky. But I think it'll be a very different, company with as I said, diversified production base and diversified geography, giving investors sort of a best of breed precious metals investment vehicle.
Excellent. All right, Lon, that was a great talk with you. So thank you for that.
Well, it's great. Thanks, Gorm. Always a pleasure to chat. I enjoy your questions, and I look forward to providing you with additional details on some of these these key points as we've got concrete information that we can release to the market.